Hey, so this video we're going to be going into a weekly recap, right? We're going to do a quick recap of this week's price action based on what we were expecting from Market Outlook that we release here on YouTube every Sunday. If you receive value from our channel and you want to see more videos like this, please remember to press the like button, share it with some people, and comment any feedback that you have. All right, so let's get into it. Just to put this into perspective, let's say on a weekly time frame, it was a potential sell idea right there, and my stop loss was above the 50% of this order block. All right, that's about 135 pip stop loss on about a 560 pip TP. Probably take about a month, 2 months to play out. All right, cool, and we are live. So I'm gonna be going over the price action that we had this week following our market outlook on Sunday. It was a pretty good week. We finished out about 5%, a little bit over 5% in profit on our accounts. Now, our anticipation was to see a bullish dollar, aiming for these highs of July here. And we did see that go ahead and deliver respectively. And very aggressively, right? And then on euro dollar, I believe on market outlook, the target price, if I go back, the target price is here. This was so 0833 was the overall sell side that we were looking at. We didn't come all the way down to 33, which is down here. We came down to about 47, so not 33, but we did come down to 108.47 on euro, and that was the main thing that we paid attention to this week. And then seeing continued sells on gold. So the week definitely played out in our favor the way that we were looking for it to. Now the question just becomes, how does this affect anticipations for next week? So in this call, I'm pretty much going to be talking about kind of recapping this week slightly, but really going over how I utilize the higher time frames and comparing these different markets together. Like on Market Outlook, you might have noticed that I, of course, look at the dollar. I looked at Euro GBP for my analysis. I look at treasury bonds, right? The T-bond futures, I looked at those for my analysis. And we also looked at gold to contribute to the analysis. And I don't trade any of those. I don't trade Euro GBP. I don't trade the dollar. I don't trade treasury bonds. And I'll trade gold in elite and ideal conditions. But at the end of the day, that's not the reason that I look at them, right? I spend the majority of my time, even I don't even do it on Market Outlook as much as I actually spend the time, or when I'm doing live sessions. Nobody would actually see how much time I do spend understanding what's going on with these other markets from the stuff that I actually trade. I actually spend the least amount of time actually on a Euro USD chart or GBP USD or, a NASDAQ, right? I spend the least amount of times on those charts because at the end of the day, by looking at other markets in comparison to them, I'm able to get a lot more confidence on where I'm going to put my money. Right? Once you become a trader, you kind of accept that every outcome is random to a degree. So there's that. But outside of the randomness of the outcome, the idea is that if the difference, again, there's a very fine line between trading and gambling. And that fine line is discipline, but I also think that fine line is information, right? It's not, you're not just at a, table playing a game, that's just based on the cards that are in front of you. Like when I'm looking at these charts and I'm looking to determine whether or not I want to take a sell on the euro dollar currency, the euro over the currency, over the US dollar, there's so many other things that I can use and analyze to give me information in favor of that decision, right? So that's the definition of increasing my odds, right? Versus when I play when I play a coin toss or heads versus tails, it's always going to be a 50-50 chance. There's actually zero things that you can do. You can't ask anybody anything. There's nothing for you to reference, none of that for you to determine whether or not you can get a better opportunity with that setup, right? So that's the difference, and that's why I do spend as much time as possible on the higher time frames with that analysis. So that's what we're going to go over a little bit here. All right. But now going into just recapping on the dollar. Again, our goal, and we're on the monthly time frame right now. The goal for this week was to see the dollar attack the weekly and daily highs, right? Which was the highs of July here, right? That was the buy side liquidity. And you can see that they have legitimately delivered for about 5 weeks straight to that draw on liquidity. Now, can the dollar continue going higher? Yeah, it can. But similar to like when you're having a win streak, right? If you're on a 5-trade winning streak, you should probably start to cut back your risk, right? If you worked for a hedge fund, they actually make you take a break after after a certain amount of wins in a row, or after a certain amount of losses in a row, they make you take a break, right? Because you're more likely to get overconfident and lose. All right. So the reason that I contribute that is because, dollar has been seeing bullishness for 5 straight weeks in a row. Just looking at this chart, when's the last time you see 5 candles of bullishness in a row, right? This here is 5 candles in a row. We have 3 candles in a row here. We have 4 right here. Pretty much never, right? That's a never situation. In the entire last 12 months of price action, that is a never has that happened. All right. If I really want to go back and find it, it was last April that we saw that, and it was about 6 candles, right? It was 1, 2, 3, 4, 5, 6 bullish candles. And then we did see the market start to regress. All right. Now, in this situation, though, here in the past, when we had these 6 bullish candles in a row, it took them trading to a recent high. And once they traded above that high, we did see them pull back, all right, come into a imbalance, and then actually take off and continue higher. So me just using that as a reference point. Again, looking at this time frame, they have came over some recent highs. If they really want to drag it, of course, I will pay attention to the highs of May. All right. So worst case scenario, beyond everything that I'm going to say, we could see dollar continue to the highs of May. All right. But dollar's already bullish. Anybody with a chart and no strategy could identify bullishness in the dollar. So I don't really need to do an analysis for why the dollar may go higher. All right. I can assume that if the markets open up next week and I see bullish price action present itself, and I'll talk about that on Market Outlook, then I'll definitely, trade a bullish dollar. But what I'm going to pay attention to, and I'm going to give myself the opportunity to be prepared for, is if the dollar isn't necessarily going to continue higher right now, right? At least maybe 1 week of bearish price action or consolidation. So going up to the monthly time frame, right? When I go up to the monthly, again, the reason that I am expecting of dollar bullishness even higher, right, way beyond where we're at right now, is because recently I saw dollar sweep the yearly low, right, the low of this entire year, Okay, dollar swept down into that level, as well as into a sell side imbalance that we left here from last year. All right, so this is liquidity from last year that's been sitting here, and then liquidity of the lows of this year. Right, so they just dropped into a very big liquidity pool, and in my mind, they're going to want to deliver to somewhere worthwhile. Right, at least the highs again of May, highs of February, and even very much so into this overall zone here that I could see the dollar delivering to. All right, which would really just be the highs of March, right? The high of this year. All right, so after sweeping this, I could definitely see them coming up above the high of the year and giving us a new high of 2023. Now, all cool and well, but given that we just came into at least a minor level of liquidity, buy side liquidity, what I'm paying attention to is that this month, we have 12 days left in this month, and we have now broken above this nice candle right here, right? And I can see that as a level of significance, right? Because if we are going to continue higher, this could form itself as our bullish order block. All right, so I'm looking at that 102.90, all right, on a higher time frame, because that is a key level on the monthly. All right, so that's a level that catches my attention. So going down from that monthly, right, I now come down and I look at that level on a weekly time frame, and on a weekly time frame, that level is also the beginning of the bearishness that swept down into this sell side, right? Ideally, we could say this is the weekly order block, so we can pay attention to that. But on a long-term perspective, this entire thing is going to turn out to be what that monthly order block looks like, right? This entire level. So even if you're not comfortable saying that's a weekly order block, I think we can all agree that, that's still a level of mitigation, right? So that's a key discount level for the markets to trade back into. All right, so I would expect that regardless of if we're going to trade higher or not, I'm going to be paying attention to going into next week whether or not we're going to trade back into this back down into this mitigation level, after again coming up above these highs of July, right? Slightly significant highs, right? That's a monthly high as well as a quarterly high, because July began the third quarter. So not only did we just sweep the highs of July, we just swept the highs of the third quarter. And you look to the left, you can see this was our last up candle here before this entire sell-off. All right, so this in itself is a entire key, resistance level. All right, so I definitely expect for them to break past this. Is not a lot that's in the way of this, but after a sweep on liquidity, I would expect some sort of a pullback lower before they just go ahead and buy up. All right, so that's kind of what I have in mind looking at the dollar. I did say in the chat that it was interesting to me that dollar is creating these higher highs and higher lows, and higher highs and higher lows on the dollar. And then when I look at something like GBP USD, like it's also creating higher highs and higher lows, right? That's 100% not supposed to be happening. Right? When I compared the two of them together. If you're a professional or an entrepreneur focused on making trading a reliable stream of income, whether you're working in your job full time or you're focused on running your business or both, and you just need a few more answers, click the link in our description for access to our free market prep mini course. All right, we're constantly updating this mini course with free value that we wish we would have had when we started. Whether you're a complete beginner or you're on your journey and just looking to get funded, I've been trading for 5 years now, profitable for over 2 years, funded with over $100,000 in prop firms. I know what it's like. All right, I've been there, done that, failed in so many different ways, and so we're constantly updating that with value. Make sure you click that link below, and don't forget to like and subscribe to the video. Let's get back to it. Right, when I compared the two of them together, so that means something fishy is going on, and it's very convenient that has euro traded below July's lows. Okay, yeah, so no, right? So Euro USD hasn't swept the lows of July's yet, but when I look over at the lows of GBP USD's low of the July lows of GBP USD, you can see that we swept that not only in the beginning of August, we also swept that here at the beginning of this week, and that's what began this entire start of a buy up on GBP USD. So that's why I say that, you know, somebody's lying, right? Either we're gonna see it just shows signs of a potential reversal, and it doesn't have to be a long-term reversal, but it just kind of plays into what it is that I'm saying about the dollar potentially seeing a pullback down to an area like this, because this is that again on a higher time frame. That's 102.94, and then when I go down to I was looking too low, right? But here's that 102.94 level. And this is that ultimate yearly low that we came to. I don't think they're going to come back all the way down there, right? But paying attention to that 102.94, this is that line. This is that weekly order block, right? That's what that is. And right beneath that level, I have some double bottoms that look very interessante. Right. So yeah, I definitely can see potentially us coming down to a level like that, and then GBP USD giving us a nice run back higher, whether it's up into this imbalance, which would be the highs of this last week here in July. So that's what I'll be paying attention to. Now, before I get into the whole intermarket analysis thing, I will say that based off all this higher time frame analysis action that I'm paying attention to, same thing with euro as with the dollar, right? Euro USD just swept the highs of the year, right? We formed the highs of the year in April, and with this last month here, Euro USD just went ahead and gave a nice juicy swing into that. All right, now looking at that, of course, now I would be looking to see Euro USD, of course, sell side, take some sell side liquidity, come down into this internal, right, into this sell side imbalance right here. That's where I would be long term looking to see Euro USD. So I actually have my eyes on that personally for some personal swing setups, because swing setups is what really makes the personal account bounce. I'm just gonna be real, right? Like that, and they don't come very often. These nice long term ideal setups, and people get so caught up on the short term analysis and on the lower time frame that they wouldn't be able to catch this. They wouldn't be able to catch this at all. So again, if we are looking to see that increased bullishness on the dollar on a long term basis, and we're seeing it continue to confirm that, I'm just being aware, because I did just say that maybe we could see a retracement on the dollar. Okay, cool. If we see a retracement on the dollar, we'll see a retracement on Euro USD as well, right? Same action, right? This is the strongest series of bearishness we've seen on Euro USD. I mean, in months, right? Similar since last year April, right here. Yeah, since last year April, it was the last time we had this many bearish candles when it came to Euro USD. So at the end of the day, I'm gonna be paying attention to potential opportunities, as they will have to calm down a little bit before they then go continue to these levels over here, right? As much as I want those levels. So my thoughts that I'm paying attention to over this next week or 2 weeks is a setup, a swing setup for a sell to these lows, right? A sell to those lows from where we're at now. It would be higher, clearly, but from where we are now, that's already 400 pips, right? I mean, that does nicely on the personal account, right? So I'm just paying attention to, if we are going to get a retracement on the dollar, how deep of a retracement can we potentially see that I can pay attention to for Euro USD. Did I save that? No, I didn't save it. I just did a markup on this, but let me see. Again, same thing. This was that last up candle here into that yearly high on Euro USD. So I'm seeing this as a weekly order block. All right, that being our last up candle here. So let me go down on a lower time frame now and pay attention to what's near that level. Right now, what's near that level on a lower time frame? Again, this being that weekly order block. So that means that is a very sensitive level. All right, very sensitive level. A lot of people won't have the patience to just identify and stick to a level like that. But you check it out on the daily time frame at that level. We have two things. We have a mitigation candle, right, where they bought up before the continued sell-off. And we also have a nice fair value gap here. And what is that at? 109,673. All right, we have a nice fair value gap right there that we can pay attention to. That's only 90 pips above where we are right now, right? So like, just to put this into perspective, let's say on a weekly time frame, it was a potential sell idea right there, and my stop loss was above the 50% of this order block. All right, that's about 135 pip stop loss on about a 560 pip TP. Probably take about a month, 2 months to play out. It's about 1 to 4 setup. Right now, is that worth it? We can catch 1 to 4 setups with our eyes closed on a week-to-week basis. So that's not what I'm paying attention to. What I'm paying attention to is as the market comes up to that level, if I'm catching any continued sells, because we caught multiple sells on Euro USD this week, but if I catch any continued sells up here in that 109.60 level, I know that I'm holding the bitches. I'm like, that's non-negotiable. Like, I know that I'm looking to catch some potential sell setups, and just hypothetically saying that they do respect this fair value gap here. Well, you just think about it if I caught that level on a short-term basis, usually it's going to be 10 pip stop loss. You get the idea, right? So that's why I'm not this is not the setup that I'm taking, but the idea is that if I am trading this on a lower time frame, when we get up there, say that markets trade up, we get some price action, boom, and then we see them come into this level, and then I see them do failure swing, boom. Now I see a lower low, right? So they came up, and then I see them give a lower high, see them give a lower low. Well, that is a short-term setup, right? I would be taking sells here with my stop loss above the fair value gap, right? 20 pip stop loss. But the point I'm making is that I would be aware that one of these positions, especially on my personal account, probably not no evaluation or something, but on my personal account, I'm going to be looking to get into something I can hold and then scale out of slowly, right? Because that is about a 1 to 25 setup, and I've only caught one of those about twice in my life, and so I'm looking to position for that on Euro USD. So that is a little bit of foresight, paying attention to. But again, I do think we could see a bit of a pullback on dollar. If we don't, like I said, we all can see the bullishness. Like, I'll participate in the bullishness, but if I do see them setting up for a pullback, I'm looking to see them target these highs, right? This high from Thursday, this high from Wednesday, this high from Tuesday, right? Just that's all of last week. This is just last week, pretty much. Just a bunch of beautiful highs in a row from last week. So let me see what the economic calendar looks like for next week. Nothing exciting, really. Nothing exciting for real next week. Federal Chairman Powell speaks next week. Actually, I lie. He speaks on Friday at 10:05. So freaking suspicious. But yeah, so he speaks next week at 10:05. And then the last week of the month, we're gonna have okay, so nothing special the last week of the month, but that same week of the last week is NFP. So I'll pay attention to how next Friday is going to affect the markets for that type of action. And the reason I pay attention to it is because coming out of last week, we did form a lot of lows here for the market to have to chop through to then go back higher. Yeah, that is a lot of lows for them to get through. So I would want to see some type of a high impact news event that would give the market an excuse to break through this type of price action. But yeah, that's what I'll be paying attention to.